In the past few months, the market has been really bad in our portfolio, and I'm sure I'm not the only one out there that's feeling the pinch. It's not encouraging when you're actually putting the money into the market and the market goes into the red every single time you're putting the money inside. I know I feel that because I've been doing the same thing. Got up to this stage where some part of me is like, hey, you might want to stop doing this because it's actually in the negative. At the same time, I've already done this over the 5 years. I have gone through COVID when it's actually gone, I guess, to the worst part of our portfolio, where every day was a red for about 3, 6, I think it's like 9 months or something like that before it can recover. I know somebody that I'm close with, they went to, I think over the whole entire course of COVID, did not recover until about 2 years ago, a year ago or so 2024. So for about 4 years, they were holding on, and then they become positive. And then I think it was like 4 years. And then recently it went on a positive really dramatically, and then now it hit again. So unfortunately, this is just the cycle of the market. There's nothing that you can really do as an individual that can change the course of the trajectory of the current situation. So for me, I have to look at this in the long term, because if you look at it in a daily chart, monthly, 3 monthly, it is not that good. So for example, I take a snip of 3 different codes that I'm actually invested on. So the first one, for example, is a VDHG. So I'm going to put a screenshot somewhere right here. If I look at this on a daily chart at the current stage, it's actually gone down for about nearly 1%. It's in the red. It's not good, because let's say it went from 64 and now becomes 63, 1% down, 0.96 to be exact. So if you look at that alone, it's in the red. It's not as good. The next one will be, if you look at it over the 5 days period, yes, it's okay because it's in the green and it's up for about 5% over the 5 days period. And then if we go a little bit longer, if we look at it over 1 month, it's down 4%. It went, we expect it to go up, I say. It's down 4%. Not as good. And then over the whole entire 6 months, it's down 5%. As you can tell, there's a giant dip, and then it went up a little bit more and whatnot. It is not as good as you thought it would be. So if we're looking at year to date, it's still down at roughly about 7%. This is, I guess, for the people, if you look at this, would be the one that has started investing in 2025, the one that is looking at, hey, I'm going to take control of my finance, hey, I'm going to start investing now. It is not good looking at that. For every $100 that you put down, for example, that means it's going down $7 in value as of right now. So not as good. The next one will be, but if you look at it over 1 year, over the course of a year, this is, I guess, based on Google, it's okay, but it's not as good. You're only making not even 1%, and it's only about 0.32%. However, now if you look at it over the 5 years, 5 years chart, it's looking better. It's looking at 10%, but that's over 5 years. Not as good because you're only making 10% over the 5 years. And however, if you look at it over the maximum capacity, yes, it is over at roughly about 13% or so. 26% over the full entire time of a maximum. My mistake. Over the 5 years, it's up 26%. But if you're over the whole entire term, you are looking at roughly about 26%. The maximum capacity of where that Google were able to grab a screenshot of this. I did during the COVID, as you can tell, during COVID, 2020, 2019, somewhere around there, it dropped dramatically. It got up to between $45 mark or so, and between $45 to $50. It just hovered around there, and it did not get to about $60 till roughly about 2022, let's say. And then it went down again, and now going up again, and then down again, up again. That's just the cycle of the market. That's just based on one code. You got to look at it in the long term, let's say. You got to look at it over the long term, over the 5 years or so, it's generating about 26% return. Now, that's just on one of the code. That was VDHG. If I look at different code that I'm holding, another one would be VGS. Again, one day, not as good. It went down to nearly at about 1.5% or so. The next one, if we look at it over the 5 days, it's gone up for 4 and a bit percent. And then if you look at it over 1 month, it's in the red at minus 3%. And then if you look at it over the 6 month, overall it's not that bad. It's still in the red at 0.11%. Next one will be, if you look at it year to date, again, for the people that is actually just started investing, year to date as of right now, it's minus 7%. However, over the whole entire course of, let's say, 1 year, it was up by about 5%. And at one stage, it did go down again, up and down, just like what the market expected to do. Over the 5 years, it has been up for about 68% over the 5 years. And then at a maximum, it's been up 154%. You have to look at it in the long term. How long are you looking at to hold this account for? Do you really need that money right now? So that's number two. I'll give you another example. So that's just not just the two. This is another one that I'm actually holding. VAS. So again, as of 1 day, it's down 0.75%. And then as of 5 days, it's gone up to over about 6% or so. Over 1 month, it's been down for about 2%. And then this one over 6 months, it's been down at 7%. As of 1 year, for the people that just started in 2025, it has been down for about 6%. And then also, that was the year to date. As of 1 year from now, say this time last year, it has been down for about nearly 1.5%. However, as of 5 years, over the course of 5 years, it has actually gone up for about 36%. And if you look at the maximum capacity of this level, the data, it's been up for about 87%. So you have to look at this in the long term. You should not look at this in the short term. I've been doing this over 5 years. Yes, there will be days that it's going to go down, up, going down. Yes, it is hurt. It is really painful seeing that your portfolio is going down, or if not, it goes into minus. But if you keep on looking at this over the 5 years or higher, you'll be amazed what it looked like. This is one of the reasons that I actually diversified to a different other, different other avenue to earn an income. So one of the other way would be doing coaching. The other one, I'm thinking of buying a franchise business. I'm thinking and we still have a full-time job as well. So those are the different avenues that I do. It hurts. It really does hurt, especially when you're doing your weekly update or when you're doing a daily update, when you're looking at it constantly, day in, day out. Some people say, look, you should not be looking at it in a daily basis or weekly basis, maybe every season, every 3 months, maybe every time 3 to 6 months or something. That might be another way. Because if you look at it in a daily chart, it is a little bit unpromising, put it that way. I'm looking at this in the long term. I'm looking at this for about 5 more years or higher. Until such time as I can reach to $1 million on this account. So, yeah. I guess from my experience is look at it in the long term. Look at it over 5 years. Don't look at it in the short term. Constantly. You have to also look at it psychologically. You got to look at it the other way around. Hey, at the moment, it's on a discount. If it's on a discount, then that would mean you can buy some more at a reduced price. Okay, for example, back to this VAS, for example. So if we look at a year today, which one is it? Let me see. I think if I were to do this one. Okay, so if I were to do maybe this one, over. So the year to date, at the moment, at a highest peak, I think it's roughly at about $105 or so. For which one is it? VAS. Let me see what is the current price value of VAS. It might be easier if I do this. Okay, so here we go. So if I were to do it over the 5 years, so at a peak, it probably roughly at $105 per share, as an example. But as of right now, it is actually you're buying them at a discount at $94 per share. So that means you're getting roughly, what is that, about $10 discount or so over a short period of time, hopefully. So is it a good time to buy? Yes. Is it a good time to sell? No. There's no right or wrong way of doing things when it comes to investing. I always tell people this, because when's the right time to buy? Now. When's the right time to sell? Now. It's all depending on your circumstances. What do you need the money for? Do you really need it urgently right now? Like for me, example, I'm thinking of liquidating one of our holding in order to purchase a business. So hopefully with the business that I'm actually purchasing, it will generate more income. That way I can put more money into these ETFs. That's just me. It might work for some, it might not work for some. That's where I'm at the moment. Anyway, that's just my 2 cents, guys, based on my current update, how I feel when it comes to market goes down. If you like this type of content, don't forget to subscribe, comment, and I will see you next video.